Hello friends, I am Smita, Assistant Professor, Department of Commerce, Central College, Adur. Today I am going to discuss a small topic with you, that is commercial bank. Banks are very indispensable for the growth of a nation. So I would like to tell you what a commercial bank is. A commercial bank is a kind of financial institution which carries all the operations related to deposit and withdrawal of money for the general public and providing loans for investment, etc. These banks are profit-making institutions and do not do business only to make a profit. The two primary characteristics of a commercial bank are lending and borrowing. The bank receives the deposits and gives money to various projects, industries, etc. to earn interest. The rate of interest that a bank offers to the depositors are known as the borrowing rate, while the rate at which the bank lends the money is called the lending rate. And the profit is the difference between the lending rate and borrowing rate. There are two functions of a commercial bank. They are primary functions and secondary functions. Primary functions are accepting deposits from the public. The bank takes deposits in the form of saving, current and bank fixed deposits. Surplus balance is collected from the firm and individuals are lent to the temporary required of commercial transactions. And for the accepting deposits, the bank gives interest to the depositors. And providing loans and advances. Another critical function of this bank is to offer loans and advances to entrepreneurs and business people and collect interest. For every bank, it is the primary source of making profits. In this process, a bank retains a small number of deposits as a reserve and offers the remaining amount to the borrowers in demand. Loans, overdrafts, cash credit and short-run loans, etc. Accepting deposits. The different types of deposits are fixed deposits or time deposits. Second one, current deposits or demand deposits. Third one, savings accounts. Fourth one, recurring deposits. So first I am going to explain what are fixed deposits. Fixed deposits are also known as long-term deposits. These are deposits for a fixed period of time, say a period of 1 year, 2 year, 3 year, 5 years. It cannot be withdrawn before the expiry of the fixed period. It can be withdrawn, but we will have to forfeit the interest. Premature closure will result in forfeiture of interest wholly or partly. The rate of interest on this account is higher than that on other types of deposits. The second type of deposits are current deposits. These are meant for businessmen who have to make a number of payments every day. No interest is paid on these accounts. We can make deposits and withdraw it anytime. Money deposited can be withdrawn at any time by checks for any amount up to the balance in account. Third one is savings deposits. The aim of this account is to encourage and mobilize small savings of the public. The rate of interest is low as compared to that on fixed deposit. The last type of deposits are recurring deposits. These are usually maintained by salaried classes. Fixed amounts can be deposited by regular installments for a fixed period. On maturity, amount deposited will be repaid together with interest. It is suitable for fixed income groups. The rate of interest will be more or less the same as on fixed deposits. Then the second function of commercial bank is advancing loans. Loans can be in the form of overdraft, cash credit, term loans, or discounting trade bills. First one is overdraft. These are allowed against current accounts. It is a temporary advance allowed by the bank through current accounts. Interest is charged only on the amount overdrawn. It is useful for businessmen. These are maintained by businessmen. Second one is cash credit. It is a type of loan which is given to the borrowers against a pledge or hypothecation or personal guarantee. Interest is charged only on the amount actually withdrawn from the account, not the total amount sanctioned. The third one is term loans. A fixed amount is paid or credited to the account of the borrower. Interest is charged on the amount sanctioned and not the amount utilized by the borrower. Then the fourth one is discounting bills of exchange. If the holder of bills of exchange needs money before the due date of the bill, he can approach a bank and get the bill discounted. After deducting some amount of discount, the bank pays the value of the bill. When the bill of exchange matures, the bank collects the bill amount from the acceptor of the bill. So discounting of bills is very important, because in today's world we cannot do business on cash basis only. We will have to give credit transactions also. The secondary functions of a commercial bank are agency functions and general utility services. So apart from the primary functions, they are performing secondary functions like agency functions and general utility services. These are provided to the general public. Agency functions are the bank acts as an agent of the customer. First one, the bank collects checks, bills and drafts. It can collect interest and dividend on the request of the customer. Payment of interest, collection, installment of loans, insurance premium, etc. Purchase and sale of securities. And general utility services. So if the customer demands payment of credit letters and travelers checks, gift checks, bank draft, etc., dealing in foreign exchange, it can provide locker services, provision of tax assistance and investment advice, etc. So we can conclude that banks are very indispensable for the functioning of the economy. A country depends upon its bank for its economic development. Industries are dependent upon banks to get loans so that they can perform their day-to-day activities, and people can pool their excess resources in the bank. If there is no bank, people will be prompted to spend all their money and there will be no savings. So a commercial bank is very indispensable in our lives. Thank you for the patient listening.